Is SoundHound still a good buy for your portfolio? Well, that's exactly what we're going to discuss in today's video. Let's dive right in to SoundHound. SoundHound's rollout of Amelia 7.0, unveiled on May 8th, marks a significant milestone, shifting its voice AI suite from reactive assistants to fully agentic voice-enabled AI agents that understand, reason, and act autonomously. Built on proprietary Agentic Plus framework, these agents offer hybrid of deterministic flows and generative AI. This enables them to complete multi-step tasks like recording prescriptions or resetting passwords without human intervention. Technically, Amelia 7.0 integrates Polaris ASR, delivering low latency and 99% intent recognition accuracy alongside seamless LLM interoperability and enterprise-grade guardrails. This positions SoundHound not just as a voice AI player, but as a leader in agentic AI, a rapid, emergent category poised for exponential adoption across industries. And this is exactly what we've seen. And I called SoundHound as being a top stock to own for growth last year when it was under $4. I made multiple videos on it, and I told every one of my students in Discord to grab shares of SoundHound safely and add it to their portfolio, and SoundHound ran to $20. Let's take a quick pause here and remember those videos and when I called it, and that was a 7x return. There is still a looming potential that SoundHound could have another 2 or 3x in the coming year or two, maybe even more. There is still a lot of potential on the table for SoundHound. Before we get back into SoundHound, I launched my ebook. It is available in the link below, and it is basically the cost of a couple of cups of coffee. If you want to learn my strategies and you want to immerse yourself in some of my top strategies and how I get in and out of stocks to make consistent profits, you want to check out the ebook below. It's only going to be available for a very limited time, so snag it while you can. Back to SoundHound. The timing is strategic. During the first quarter of 2025, SoundHound's revenue jumped 151% year over year to $29.1 million, supported by expanded voice commerce in restaurants and automotive integrations. Though slightly below expectations, the company maintained a strong guidance of 157 to 177 million for 2025, backed by a record pipeline and 246 million in cash with no debt. This is extremely powerful and something that you should be thinking about right now. No debt. Amelia 7.0 could be a catalyst, offering defense against commoditization in speech-to-text markets and unlocking new revenue streams via autonomous agents in healthcare, finance, customer service, and a lot more. Still, SoundHound must convert technological leadership into clear monetization, maintain competitive gross margins, and scale enterprise adoption amid macroeconomic pressures. Amelia 7.0 is a transformative leap. If SoundHound can translate this tech into scale, the stock could enjoy a strong re-rating. However, execution is the key, and especially in providing an ROI and driving profitable growth across diverse verticals. Rising competition in the agentic voice AI space, as SoundHound pushes forward with Amelia 7.0, it faces mounting competition from both established tech giants and specialized AI players who are also sculpting the voice AI frontier. Microsoft, through its Azure OpenAI integrations and Nuance Communications unit, remains a formidable force. Nuance's deep roots in healthcare, voice automation, and conversational AI give Microsoft a strong enterprise footprint. By embedding large language models into voice-enabled workflows, Microsoft is targeting the same high-value verticals like finance and call centers that SoundHound seeks to disrupt. Alphabet, which is Google, with its Assistant and Vertex AI platforms, is another heavyweight rival. Google Assistant is already embedded in millions of devices, and Vertex AI provides developers with customizable voice agents powered by Google's advanced speech-to-text and LLM. them. Its scalability and ecosystem spanning Android, smart home, and workspace present a serious challenge to SoundHound's adoption in consumer and enterprise environments. So there's a lot of growth potential on the table for SoundHound. In fact, SoundHound at the current price is fairly decent, but what's really holding them back is guidance as well as profitability, and not only that, the competition in the space, and there's also a looming lawsuit for SoundHound. And there are a lot of people that got into SoundHound when it was up in the $16 to $18 range, and they're all going to be waiting to sell when the stock reaches that range yet again. So there's a lot of pressure and a lot of resistance in the $16 to $21 range, and it's going to take a lot of buying to break through that. So this is a really long play, but inevitably, if SoundHound can achieve the profitability and the numbers that they're projecting to do and grow to where they're likely to, this company could very well and possibly see a 3 to 5x in the coming 3 years. This still has a lot of room to grow. Think about all the other tech stocks in the world like AMD, Nvidia, Google, Microsoft, Meta, Big Bear AI, Palantir. Even look at SoFi, that's on a tear as of the last 4 to 6 months, just like SoundHound, but is holding a much higher price, although different sector and a stronger company, more profitable. However, there is a lot of room to grow in the coming years. And like Dan Ives has said, and I will quote him, we're at an overnight party that goes to 6 a.m. and it's only 10 p.m. I've been saying this for a long time. I think this is fairly accurate, although I feel like we're closer to 11 p.m. or midnight. There's still a long way to go. And if SoundHound can achieve exactly what they're setting out to achieve, the sky's the limit really for SoundHound. It could potentially 4x, 5x. It's hard to say exactly, but realistically, based on price to sales, based on the tech, and based on the sector and the analysis I've done on SoundHound and where they're projected to go and the market that they're in, if they can achieve what they're setting out to achieve, it is very, very realistic that SoundHound could be pushing in the 20 to 25 range by spring of 2026 or sooner. It really just comes down to growth, and if they can push hard enough in the direction that they intend to go. Let's take a look at the charts. Let me show you where I would want to get into SoundHound and how you could actually execute this strategy. And if you enjoy the strategies that I'm going to show you in this video and how to get into SoundHound, and you really want to grow your portfolio and you want me to show you how to turn your losses into wins, you can sign up for my Discord at any time. The link's in the information box below. And if you want a sneak peek at my strategies and you want to see into the world of Invest with Corey and understand my mind and how I take trades, and you really just want to dive in and do some reading on some strategies and really see how everything works, and in 5 or 10 years from now, this book will probably be cheaper than a cup of coffee at Starbucks. So you don't want to miss out. Very limited time on this book. Once the deadline is up, I'm never bringing it back. It's a one-time only deal, so don't miss out. Looking at SoundHound, you can see that the AVP, my custom AVP strategy, which I teach in my masterclass in Discord, is a very accurate way to look at stocks' average weighted price over time. Time and average is very important when trading and investing. And the average weighted price, my AVP, very specific strategy that I created from hedge fund strategies, dark pool data, and analytics over the course of time on a stock, which it's taken me years to get just right. But this AVP on SoundHound shows an average price on the bottom of just under $8 and an average price on the top of just over $11.50 or closer to $12. So we're in the middle of this right now. When we look at this price, we have to look past the fact of whether or not the stock is overvalued, or if the stock is undervalued, or if it's priced exactly what it's worth. What we're looking at is a strategy that looks past all of that and just uses time and average to show you what people are willing to pay and what they have actually paid on SoundHound. So when you use this strategy, we can see that this is the average range that people are buying and selling SoundHound. And we can see that since November of 24, which was 7 months ago, almost 8 months ago now, the price has not hardly ever been below $8. Only briefly during the market crash a few months ago where it only spent maybe 3 weeks below $8. Not even full 3 weeks. It was actually 5 days followed by another 5-day period. So only 10 days out of the last 8 months, it's been below $8. This tells you where the floor is on SoundHound. And right away, that tells me I want an average price of $8 because I'm actually going to be doing very well if I can get an $8 price. In fact, SoundHound was even peaking $6 and $7.50 last November and October. So $8 is not that high compared to what has happened in SoundHound since. So realistically, between $8 and $8.50 is an okay range to get into SoundHound. And that's exactly what I would be looking to do. Now, there's two ways you can do this. As we can see, SoundHound dips down, comes back up, and then dips down, and it's probably going to dwindle down somewhere in the 870 to 880 range. It's going to be somewhere in here in the coming weeks, likely, but not for sure. But instead of buying SoundHound, like some people would do and put a stop loss down here with put options, it's also the same thing. What we would do is we would put a limit buy order down around 820, where maybe I buy 500 shares, and then if it drops to 740, I buy another 500,000 shares, giving us an average price under $8, which is very powerful. If you're going to sell put options, though, you really want to try to get the most premium, and the stock very well could dip to $8.99 or very close to $8.99. So what you're going to want to do is you're going to want to get a limit order on a put option so that you can sell an $8 put but collect the premium when the stock falls below $9 or close to it. Let me show you exactly how we would do that. So first off, what we have to do is look at SoundHound and say, okay, we want to sell an $8 put, but we don't want to do that until the stock reaches $9. What's $1 out of the money? The current price is $9.42. So whatever price an $8.50 put is right now, that's the cost that we want for an $8 put. So when the stock drops, we get filled. Very simply, the stock is $9.42 right now. So if we look at an $8.50 put, it's $1 out of the money. So let's look at that going out to the end of the month, actually July 3rd, which is 2 weeks. And if we look at an $8.50 put right now, it's worth about $16 every 2 weeks. So if we go down to the $8 put, click on it, and I was to put in here $15, I'm essentially looking to get the same price for the $8 put as the $8.50 put, which is not going to happen. In order for me to get filled at 15 cents on the $8 put, which is the same price again, like I said, as the $8.50 put, the stock has to be within $1 because the current price is $9.50 and this $8.50 put is $1 out of the money and it's $15, which means once the $8 put is $1 out of the money, it will get filled at $15. However, if it takes multiple days because of theta, the stock would have to drop a little bit more to get 15. But all things aside, if it happens within a day or two, it's likely to get filled at 15 as long as the stock drops to just under $9. So that's what we do. We hit place order. It'll immediately place this order in the queue. The moment the market's open and SoundHound drops close to $9 or just below, it'll automatically fill these puts. Now, the reason for this, if I was to sell put options on SoundHound every 2 weeks for $15, or even if I was to go out even further, let's even go over a little bit further on SoundHound. If we go out a little over a month to July 25th, we would want to get the $8.50 price for the $8 put, which is going to be around $45 to $50. So what we would do is we would click on this $8 put going out 1 month, and then limit order would be put in for $50. And essentially, if the stock drops 40 cents roughly, this will get filled. Now, the reason for this, if I can sell put options at $50 a month or even $45 a month, I only have to be able to sell 1 or 2 of those. Just one gives me an average price price of $7.60 or $7.50. So if I get filled on these and then the stock tanks to like $7.50, my average price is $7.50 because I collected $40, $50, $60 premium on an $8 put and the stock drops. So essentially, by selling put options down right around here and getting $50 for them, the stock will drop down to right around here, will get filled, and the stock has to drop all the way down here before we're even getting assigned, and then it's got to drop all the way down here before we're at break even. It gives us a lot of protection. It's not the only way that you do this. You can actually go in and we can go out every 2 weeks and we can sell $8.50 put options for $15 every 2 weeks, which is $30 a month. As we can see, if we go out to July 18th, which is 1 month, they don't have an $8.50 put. We'll have to sell a $9 put, but July 25th does have $8.50. So you can see we'd get about, like I said, $50 on an $8.50 if we were to sell it right now, essentially giving us an $8 break even. So every month we can sell a $50 put. If we do this twice, we have break even of $7.50. 3 months, it's $7. If you can sell put options for 3 months, you can really get into the $7 range if you're not assigned. And then at that point, you can just start selling closer to the money put options at say $9. Because if you sell a $9 put after selling $8 puts or $8.50 puts for 3 months, that's $1.50. Then if you sell a $9.50 put at the money, then you're essentially going to be getting $55 to $75 a week. If you do that for a week or two, that's another $1.50, which is $3. Even if you get assigned at $9.50, that gives you $6.50 average price. So you can make money on SoundHound. And this is what I highly recommend you do. When you look at SoundHound, even if you were selling these put options at $9, I would not really recommend doing $9 puts unless you're going a month out. I would recommend doing bi-weekly $8.50 because this is going to give you enough premium and a break even on your first or second time to be close to $8 or slightly below. Then you're getting in right where it's perfect because a $7 average price in SoundHound is very good. Now, if you're going to do a $8.50 put going out a month, it's going to give you an average price of $8. If you decide you want to do 2 weeks, which would work, but you'd have to be a little bit more aggressive, you could do $9 puts. This is about $30 every 2 weeks, $60 a month. If you do this 2 times, 1 month gives you an average price of $8.40. If you do it 2 months, it gives you an average price of $7.80, which is very good. So really, you only have to sell $9 puts 3 or 4 times in a row at 2 weeks each, and that will give you an average price of $7.80. $9 take away $1.20 is $7.80, and that would give you an average price of right around here, which is perfect. Very good entry to SoundHound. It's what I would recommend doing if the stock does drop and something like this and you get assigned. Then I would wait for some stability. Might take a few weeks, and as the stock starts to go up just a little bit, I would start firing off 7 and 750 puts because this premium will add up. And so if you end up doing that and the stock goes up and you don't get assigned on any of these puts, it comes off of your dollar cost average. So essentially, if you have a $7.80 average cost and you get assigned on your $9 puts, let's say the third, fourth time you do it, and you have an average cost of $7.80, you sell a bunch of these puts for $50, your average cost is now going to be $7.50, $7.40. You're working on collecting more and more premium and lowering your average cost, and you're going to want to hold these shares long term. So we're trying to acquire them below $9. This way, you have a cheaper and lower average cost while collecting premium and adding to your position. Just remember to keep it below or equal to 10% or less, as you don't want to go too heavy in a growth stock like SoundHound. You want to be safe. And if you guys want to check out my ebook, which I officially launched, the link's in the information box below. Very limited time. When it's gone, it's gone. Take a dive into my methods of madness and my strategies in this book to open your mind to the possibilities in the stock market and what's really going on. And if you guys want to book a call and join my Discord so I can show you how to turn your trades from losses to wins and show you the right way to do things, it's what drives me every single day. I look forward to seeing you in the Discord real soon. The link for that is also in the information box below. I'll see you guys on the next video. Take care of yourselves, fam.